So your money will not save you. What I mean by that is if you have a big nest egg, you've saved a chunk of change, you've got a retirement account, you've got stocks, you've got bonds, you have cash, you have conservative investments, there is a high likelihood that you're going to lose 50 to 90% of the wealth that you've created. And it's just simply a math equation. I'm going to explain to you how this works. And in this video, you're not going to want to miss it because I'm going to talk about what happens over time when you have an economy fueled by debt and the bill comes due. So stick around. It's going to be a great video. We've got a great quote at the end as well. So I love talking about this topic. I probably talk about it too much just because I think that it is something that most people have no idea what this actually means and why is it going to happen. But I want to show you this chart here. This chart here is talking about the 120 trillion in unfunded liabilities, meaning Medicare, Social Security, pensions, there are federal and state pensions. There's all kinds of these liabilities. There's the national debt. And so this adds up. So when you add this up per person, we're talking about over $200,000 per working adult. And if you add in corporate debt and personal household debt and things, it's closer to $450,000 per working adult, which is something that it's going to be very difficult to ever pay that off. So what happens is as we kind of move forward here, there's some scenarios that are really important that you prepare for. So with this chart here, you're going to see the M2 money supply, which is all of the money that has been printed and is in bank accounts. You're going to see this huge spike at the end. And you're going to see that basically 35% of all the dollars in circulation were printed in 2020. Which is really something marvelous, and it is going to have a very significant effect on inflation over time. Now again, why that's important is because we have all of these liabilities that are out here. Liabilities are things that you owe. So our government owes people stuff. They owe people health insurance and pensions, Medicare, Social Security, and the national debt. And these are things that they're going to have to pay back. The U.S. cannot default on its debt or else it loses its ability to borrow and the whole party stops. If it doesn't pay for Medicare and it doesn't pay for Social Security, it's got a lot of older people really upset because they've been paying into this for years. So what is going to happen? What's this scenario going to look like? Well, I have a thought I wanted to share with you in a way that you can prepare for that scenario. And what it is that politicians cannot say no to everybody. It's very politically costly to say, you know what, you've been paying into this for years and you don't get your Medicare. I'm so sorry. Or you don't get your Social Security. You only get half as much. I'll tell you what, that is not going to happen. And with what's happening right now, they are doing so much stimulus and money printing and different things that we are going to print our way out of any deficit that's there. So what are the long-term impacts of that over the next 10 years? Well, if you print your way out of something, you just simply make the current dollars that you have worth less. So your money isn't going to save you. The cash that you have, the different resources, it's not going to save you because what happens is the more money that you have available, this is very true especially for bonds, you're not going to see the appreciation of these things with inflation. With stocks, there's some ability that it could increase over time with inflation, but that assumes we don't have a major recession that brings us back to about a third of the stock market value, which might make it actually appropriately valued. So that would be a huge haircut, an over 50% haircut off of where the stock market is right now. But even if that doesn't happen, just by you holding dollars and somebody printing more and more and more of those dollars, the dollars that you're holding in your hand become less and less and less valuable. And then the reason this is important is if you're looking to retire in the next 10 years, you're looking to basically take the money that you've worked so hard for and be able to have something for the future. It's really important that you take some action steps as you go into this. So I mentioned this before in my video, and again, I love sharing this because it just really illustrates kind of what I feel is the biggest threat to our financial stability as individuals in the US. I don't think it's going to cause the nation to fall apart. I just think that the dollar is going to be worth less and less. So what happens is when you print and 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 you print, there's no stop printing just to print your way out. Eventually you get something like this. I've shared this on other videos. This is a $1 trillion bill, one with 14 zeros, issued by the Bank of Zimbabwe. in 2008, and shortly after it was printed, it was worthless because everybody saw that it did not have any value. So basically, what is the next step then? What are the things that you can invest in? These are the two things that I talk about to really protect yourself from inflation and from money printing, from things that are out of your control. It's basically moving substantial portions of your wealth into real assets. One of these is gold and silver. The reason I like gold and silver is because we've agreed for 5,000 years that this is money. And it is portable, it has certain qualities that you can basically, it's seen itself as a store of value. You know, a $20 bill does not have a built-in store of value. It's paper. It literally is worth, nothing, or it's worth just literally what paper's worth, which is not much. Gold and silver are very rare, they're precious, they're used both industrially as well as in a lot of jewelry and other things, and people assign value in even making them coins for the last 5,000 years. So there's value there. The second thing is multifamily real estate. Why multifamily real estate? Why not, shopping malls and houses and other things? Well, the reason is because multifamily truly is the bread and butter of real estate investing, and you can invest passively. Some people invest in a duplex, but what I'm talking about is typically over 100 units. A lot of people invest passively, and they basically will receive distributions from the cash flow as a passive investor. Often you get into these deals starting as low as $50,000, which is really amazing. But what it does is it provides a protection, a hedge against inflation, and as rents rise, value of the property goes up. So it's a way to protect wealth in real assets. The second thing that really happens, that's even a kind of a bonus, is that as rents rise and as the value of a property rises, the borrowing or the loan against the property, it's less in real terms in the new dollars. So as, let's just say, things inflate over time, those loans become less valuable. There's less that you owe because the building is worth substantially more. And it's not just because the building went up in value or because rents went up. It's actually because inflation is happening and it's devaluing the value of those loans and it's increasing the value of the real assets. You actually get kind of a bump on both sides. You get a bump from just rents and money printing and other things, but you also get the value of the loan actually goes down, which is really amazing. So I want you to be thinking about this. I want you to be prepared. I want you to make a plan. And I have a quote today from Bobby Knight, the Hoosier basketball coach, which had he was a very fiery guy, but he has this really great quote. So we're going to look at it now. He says, "The will to succeed is important, but what's more important is the will to prepare." So important that we prepare, right? Risks and the things that we don't see coming are the things that have the biggest potential to cause harm. So I encourage you to check out this free report that I wrote. It talks about the single best investment strategy during and after a pandemic. It highlights why multifamily is the best investment that you should be involved with. You can download it for free at bronsonequity.com. At the same place, you can also join our investor club. Basically, we can begin a relationship and put you on our deals list and let you know about upcoming deals that we're doing, which would be great. So anyway, please put your comments below, like and subscribe to this video if you got value from this, and share this on social media. Really enjoyed doing these videos, so look forward to seeing you on the next video.